Okay, now you see question number 5. In this question number 5, M and HR partners. M and HR partners in a firm of chartered accountant. They share profits and losses in the manner as stated below. How they inform you to share the profit? In that way, you share the profits and losses. Okay, you share the profits and losses. The following was the balance sheet as on 31st March 2011. 31st March 2011 balance sheet given to you people. This 11 means last year. Remember this. Whatever balance given in the problem is the balance sheet of last year. So in the balance sheet of last year, capital is there. Okay, this capital goes to balance sheet. Remember this. You take this capital to next balance sheet. Provision for audit fee outstanding. Provision for outstanding fee is here 1 lakh. This is the last year closing. Last year closing becomes opening for the current year. Opening for the current year. But in the asset side, you see there outstanding fee. Outstanding fee is equal to 1 lakh rupee. Liability side 1 lakh rupee. Asset side 1 lakh rupee. Both is there. Provision is equal to outstanding fee. So if you leave this point, it will not affect. Both are same, so you leave that. Instead of taking the opening provision on the income and expenditure account, credit side as opening, and this is to be adjusted. If you adjust these two, it will not affect. So better to forget it. It's better to leave this point. Both amounts are same, so this amount will not affect you. Clear? And next is audit fee collected in advance. This is the advance collected. It is collected advance in the last year. So this is the income of current year. So you add this amount in the respective partner's fee. In the respective partner fee, you add 20,000. Then outstanding salary. Outstanding salary, it is the last year outstanding. Last year outstanding is not a expense of current year. So you deduct this outstanding salary in the current year salary paid. So this is to be deducted in the income and expenditure account. Okay. Then furniture goes to balance sheet. Office equipment goes to balance sheet. Motor car goes to next balance sheet. Library it also goes to next balance sheet. These are the opening balances in the coming balance sheet. And make adjustment according to given instruction. Cash at bank, cash in hand, asset, these are already goes to receipt and payment account, opening balance. Clear? Then you see the next, the following receipt and payment account is given for you people. Receipt and payment account is given to you people, and you see the receipt and payment account. Okay. In the receipt and payment account, first is opening balance. This is from the opening balance sheet. This is from opening balance sheet. It is already taken in the opening balance sheet. Next, you see there, audit fee. You take audit fee in the income and expenditure account credit side. This comes to the income and expenditure account credit side. Okay. And second is other fee. This is also income. This also comes on the income and expenditure account credit side. This also comes on the income and expenditure account credit side. Okay, income and expenditure account credit side, and you have to make adjustment for audit fee and other fees. If there is any advance, you adjust it, and outstanding you show separately. We show the outstanding separately. Clear? Miscellaneous income goes to income and expenditure account credit side. So these three items go to income and expenditure account credit side. Okay. Then next come to payment side. Salary is a expense. Traveling expense is expense. Printing and stationery expense. Postage expense. Telephone expense. Motor car expense. Membership fee expense. Subscription expense. These are the expenses. These are the expenses go to income and expenditure account debit side. Income and expenditure account debit side. Okay. Next is office equipment. Office equipment asset goes to balance sheet. Okay. Office equipment go to balance sheet, and you add this amount in the office equipment. Take the opening balance from the opening balance sheet, add 32,000, thereafter deduct depreciation. This is a confusing point. You make this adjustment very carefully. And next is library books. Library book also asset goes to balance sheet, and here also you take the opening balance sheet of library book, add purchases 24,000. Thereafter you deduct the depreciation. Clear? Then drawing goes to balance sheet. Drawing goes to balance sheet. Drawing go to balance sheet, you deduct the drawing in the capital. And cash at bank, cash in hand, go to balance sheet asset side. Clear? Then you see the adjustment. Outstanding salary, 40,000. This outstanding salary you add in the salary. Last year outstanding, you deduct. Current year outstanding, add. Then audit fee collected in advance. Audit fee collected advance, you deduct. This current year advance you deduct in the respective account. Last year advance add in the current year amount. Okay. Audit fee receivable from Mr. M 60,000 and H 1 lakh. This is the outstanding fee. Outstanding fee first you take on the credit side of income and expenditure account. Credit side income and expenditure account. Then you take the provision on the debit side of income and expenditure account. 1,60,000 total first comes on the credit side of income and expenditure account. Then it comes in the debit side as provision. And the same you have to take in the balance sheet. Asset side outstanding, liability side provision. So 4 times you have to write this item. C adjustment. C adjustment you have to make 4 times. Remember this. C adjustment. The next is depreciation. Depreciation provided for furniture 10%. On opening balance of furniture 10% you make. On equipment 20%. On equipment 20%. So equipment are 2. There are 2 equipments. One is in the balance sheet. In the opening balance sheet, what is there on that you have to calculate 20%. And here in the income and expenditure receipt and payment, equipment is there. Equipment is 32,000. You remember, on this 32,000, you take 10% half, not full. Not full, because it is now purchased in the middle of the year. 32,000 is the value. 32,000 is the equipment purchase. On this purchase, you calculate on an average half year depreciation. That means 10% of 32,000 is 3,200. 3,200 1 year depreciation, half you take, that is 1,600. 1,600 is the depreciation on purchase, and on opening balance, you calculate 20%. Okay. Opening balance you calculate 20%. In the same way, library books. Library books 10% on the opening balance. 10% on the opening balance you calculate, and purchase 24,000. On this 24,000, half year depreciation you calculate. Half year depreciation you calculate. Okay. Half year depreciation and take in the balance sheet. So two depreciation you calculate. Balance sheet, opening balance, full value, purchase value, half depreciation. Total depreciation you take. Same way, motor car 20%. Depreciation on motor car 20% you take. Okay. Then here is the adjustment. 80% of the audit fee goes to transfer to income and expenditure account, and 40% other fee income and expenditure account. So 80% and 40% goes to income and expenditure account. Remaining 20% and 60% goes to capital. Remember this. Then each partner share profits and losses in the ratio of 3:2. Whatever profit is there, that profit is distributed in the ratio of 3:2. Okay. You see the solution. Income and expenditure account. First you take salary. Salary is 5,20,000 in the payment side. For this you make two adjustment. Less last year outstanding 10,000 from the balance sheet. Last year outstanding you deduct and add current year outstanding. Current year outstanding is 40,000. So add current year outstanding less last year outstanding. Then balance is 5,50,000. Okay. Next you take traveling expense. Traveling expense is direct. Next, printing and stationery, direct. Postage, direct. Telephone expense, direct, no adjustment. Motor car expense, directly you take. Membership fee, directly you take. Subscription to journal, directly you take. Okay. Depreciation. Total depreciation 40,000. Furniture 10%, 4,000. And equipment you have to calculate separately. On opening balance, you calculate 20%. 30,000 into 20%, 6,000. On opening balance, 6,000 depreciation. On purchase, 3,200. Total it is 9,200 depreciation. $9,200 depreciation. Then next you take books. Books 10%. Opening balance you calculate 10%, and on the purchase you can calculate half depreciation. That amount is 5,200. 5,200. So total depreciation is, one more is there, motor car. Motor car you calculate 20%. Okay, so total depreciation is 40,000. Thereafter you take provision for outstanding fee. Outstanding fee means current year outstanding. Current year total outstanding is 1,60,000. You take it. Okay, thereafter you credit side you take the incomes. First income is audit fee. In the audit fee, you calculate here. Mr. M is 5,60,000. Out of that advance received last year. Last year advance received, you add 5,80,000. Out of this 5,80,000, 80% comes here. 5,80,000 into 80% you calculate. That amount is 4,64,000. Okay. And second one partner is H. 3,60,000 is the audit fee received. Out of this, less advance current year. H is advance of current year, you deduct it. Balance is 3,20,000. On this 3,20,000, you calculate 80%. 80% of this is 2,56,000. Okay. 2,56,000. This is audit fee. In the same way, other fees. Other fee is 1 lakh is there. And 60% goes to balance sheet. 40% you take. 1 lakh into 40%, 40,000. Then H 80,000 is there. 80,000 into 40%, 32,000. H share. Okay. These are the fees. 80% audit fee, other fee 40%. After making advance adjustment. Okay. The next is miscellaneous income is there. You take miscellaneous income. After the miscellaneous income, from the adjustment, you take outstanding fee. Outstanding fee is total 1,60,000. Audit fee is 60,000. Other fee 1 lakh. Total it is 1,60,000. 1,60,000 is the outstanding. So this outstanding you write. The same outstanding is made provision on the liabilities debit side. Provision 1,60,000. Okay. In this way you complete the account and close the account. Total is 9,60,000. 9,60,000. Then difference is 8,000. 8,000 difference is called as surplus. This surplus goes to balance sheet. Profit sharing ratio is 3:2. 8,000 into 3 by 5. First partner 4,800. Second partner 8,000 into 2 by 5. 3,200. This is the solution. Okay. In this way you take the solution. Thereafter you prepare the balance sheet. In the balance sheet, first you take the capital of M. M capital is 1,20,000 and take his incomes. First income is net profit. Second income is audit fee. Audit fee 80% is taken there. 80%. Here you take 20%. The next is other fee. Other fee 40% taken in the income and expenditure account. Remaining 40% comes here. 40% comes here. Okay. Then total is 3,08,000. In the 3,08,000 you deduct the drawing. Drawing is 1,44,000 you deduct. Your answer is 1,56,800. 1,56,800. Okay. Next is H. H capital is 90,000. Add NP, add audit fee, add other fee. Audit fee 20%, other fee 60%. Okay, remaining part. Total. Deduct depreciation drawing. You deduct the drawing, your answer is 85,200. Capital adjustment is 85,200. Okay. Then you take the provision for outstanding fee. Current year outstanding fee is 1,60,000. Current year outstanding 1,60,000. Then current year advance. Current year advance from H is 40,000. Okay. Then current year outstanding salary. Current year outstanding salary is 40,000. Like this, you take the current year, not the previous year. Okay. Then asset side. Asset side furniture. Furniture is 40,000. Less depreciation 4,000, 10%. Less depreciation 4,000. Okay. Second, office equipment. Office equipment you take from the balance sheet value. Balance sheet value is 30,000. In the balance sheet 30,000. Then add purchases. Purchase is 32,000. Total 62,000. Okay. On this total 62,000, you deduct depreciation. Less depreciation. Depreciation is 20%. Oh, okay. So you have to calculate 20% on 30,000. 30,000, 20%, 6,000. And 32,000, 20%. But on 32,000, you calculate only half. So on 30,000, first you see here, on first 30,000, 20% is equal to 6,000. Okay. And then next on next 32,000, 20%, but you have to take half, not full, 6,400. Out of 6,400, you have to take half. Half means 1/2. You take half is equal to 3,200. So 3,200 plus 6,000. Total depreciation is 9,000. 6,000 plus 3,200. 9,200 depreciation you have to take. 9,200 depreciation you deduct. Opening balance, purchase, total depreciation 9,200. Okay. In the same way, next is motor car. 1,20,000 less depreciation 24,000. Office library book. This is library book. Books is 16,000 opening in the balance sheet. Add purchases 24,000. Total 40,000. Less depreciation. It is also same. 10% on 16,000. 10% on 24,000, but half. The depreciation is 2,800. You calculate separately. 37,200 is the balance. Then outstanding fee you take 1,60,000. Cash in hand 4,000. Cash at bank 96,000. Then take the total. Total is 4,82,000. 4,82,000. Okay. This is the problem number 5.